Good morning, students. Today I'm going to show you how to do the basic payroll calculations for one person. And this is typically a question that you will get in assignment 2 or test 2, not in the exam. In the exam, you will be required to do the basic payroll calculation for 7 people. And we will look at that at a later stage. So here let's get going and take a highlighter. I'm going to use the yellow and mark everything that's important here. So it says James Blue, aged 40, is entitled to a monthly salary of 16,200. So two things that's important. He's aged 40. So we know that he's under 65 and only the primary rebate will apply in his case. And we are given his monthly salary. Okay. Second question, sentence says, in addition to this basic salary, he worked 6 hours overtime at an hourly rate of 135% more than his usual remuneration of 110 per hour during November 2019. Okay, so what do we see here? We see he worked 6 hours overtime at an hourly rate of 135% more than his usual remuneration of 110 Rand per hour. Now look what's happening here. We cannot just, he's not getting 130% of his usual remuneration. He's getting 130% more than his usual remuneration. So you can't just go and say 6 times 10 multiplied by 135, you're not going to get the right answer. If he gets 135% more than the usual, it means that he gets the usual, which is 110, and then on top of that, he gets another 135%. So his his hourly remuneration for overtime will be double this plus a little bit more. Okay. Then it says he also earned 1,296 in commission. Just do that. Okay. And he received a housing allowance of the same amount, 1,296. Then he tells us he has the full use of a company car. The car had cost the business 189,750, including VAT. So we know that it is a passenger car, and therefore we are going to work with a VAT inclusive amount. When it was bought and allocated to him last year, now you're thinking to yourself, how do I know it's a passenger car? They would have told you if it's a delivery vehicle, and I've never ever seen that. So this is definitely a passenger car that he's using. The car did not have a maintenance plan, and his employer expected him to use the car equally. He's using the car, look there, equally for business and private. Oh, that was wrong. For business and private purposes. Okay, so let me do that again. He's using the car equally for business and private purposes. Okay. That means, of course, that he is using it less than 80% for business purposes, and therefore 80% of this benefit will be taxable. It says the monthly value of the use of the car for tax purposes is 3.5% of the VAT inclusive cost of the car. He contributes 7.5% of his total package, excluding the car, to the pension fund. He does not receive any other bonuses or 13th checks. He does not receive any other fringe benefits, and he does not belong to a medical aid. And then they say to us, assume a maximum UIF salary of 14,872, and then they just go and they give you the tax table with the rebates that was applicable for this year. Of course, in your case, it's now already 2023. These numbers would have changed, and that number would have changed, but the principles do not change. Okay, so then what they give us, and then they say, okay, you are required to complete this abbreviated payslip in the answer template for the period, and where the amounts are missing, you must fill it in. And then they give you the abbreviated payslip and the taxable remuneration column where you are going to see how you are going to calculate the pay as you earn that we will deduct on the salary slip. And then they say, show your calculations of tax and UIF payable. Okay, now let's have a look at how I did that. So, first thing I did is I said, what do we know? Well, we know his name is James Blue. We know that he gets a salary of 16,200. We know that his normal hourly rate is 110 Rand. We know that he gets commission of 1296 and he gets a housing allowance of 1296. And we know he worked 6 hours overtime. We also know the value of the car, inclusive of that, and the monthly value that is taxable, the 3.5% of the car value. We also know that his pension rate is 7% of everything except the car, and now we can go and we can calculate these other things. So when we get to the overtime rate, the easiest way to say 110 plus 135% of 110 is just to multiply it with immediately with 235%. It is the thing, which is 100%, plus 135% of the thing. That is how you get to 235. So let's just quickly fill that in. And now we can simply go and multiply with the 6 with 235, and then we can see that his overtime pay is 1,551 Rand. Okay. What about the company car? We have the value and the monthly value. We know that he's using it 50%, and so 80% can be taxable. And I hope you are seeing that every time that I did a calculation, the formula is there for you to see in the formula bar. Okay, so we know that 80% will be taxable. And so now we can go and we can say, well, 189,750 multiplied by 80%, multiplied by 3.5% will give us the amount that is taxable for the use of the company car, and it is 5,313 Rand. Then they say, okay, his pension rate is everything except for the car use. So what do we have here? We have his basic salary, we have his commission, we have his housing allowance, and we have his overtime pay. And when we add all of that together, we get the full amount that is pensionable, 2343. And then we simply multiply that with the 7%, and then we can say, see the pension that is payable. 1424 and 1 cent. Now, when I then get to the salary slip and the tax remuneration table, I didn't even fill in anything because I thought we can do it as we go along. So we know what his basic salary is. It was given. Okay, it's 16,200, and we know that all of that is taxable. We worked out his overtime, 1551. So we can put his overtime in there, and the full amount is taxable. We look at his commission. His commission 1296, and his housing allowance is also 1296. So we can complete those two columns. And once again, the full amount is taxable. So you just put the same amount here in the taxable remuneration. Then, when it comes to the company car, obviously, guys, it says here on the payslip, this is earnings received in cash. So you cannot go and take one wheel a month and say to the guy, yeah, here's a part of the car, because then he won't be able to use it. So the cash part of the company car that he's getting is then obviously zero. Okay, it's not going to feature on his payslip, but it is going to feature here on the taxable remuneration side. Okay, and of course we worked it out at 5313, so we can simply put it in there. Okay, then what we now do is we have to total everything in the taxable remuneration column, and when we total that, we get to an amount of 25,656. But of course, before we tax him on that amount, we must first subtract his pension fund contribution. We know what his pension fund contribution was because we worked it out here. 7% of that 20,000, it was 1,424. Okay, so let's put it in there and subtract it so that we can get the balance of remuneration. Now, once we get the balance of remuneration, we will be able to calculate his pay as you earn. But first, total up those amounts in this column 2, and it's 2343, and of course there we also saw that it was 343, and that's the way it should be. It can suddenly be something different, and now we have to go and we have to subtract certain things. Okay, he is paying that pension fund contribution, so it is coming off his salary. And then we have to work out his pay as you earn. The pay as you earn, when we do that, it starts with the balance of remuneration. So there, I'm going to put in his balance of remuneration amount, that 23,239 and 99 cents. Then the next thing we have to ask ourselves is, does he get the 13th check? They specifically told us he is not getting a 13th check, so he has only 12 pay periods. And if we multiply the 12 with the balance of remuneration for his total taxable pay, we get 290,783 Rand that he is earning a month. Okay, now we have to go and look at the tax table. Now look at that, 290,783. If we go back to our tax table, let's go to our tax table. Okay, just look at that value again. 290,783. So where does it fit in? 290 is somewhere between 195 and 305. So we see this. He is going to have to pay 26% of the taxable income above 195,850, and then on top of that he has to pay another 35,253. Okay, let's see how we use that information. So we already have his taxable income. That's what we calculated there. Then we must subtract that foundation payment, the place where they say everything above this amount is pensionable at a higher rate. So we take that foundation, and it was 195,850, and we put it in there just to show you again. There, 195,850. That's the foundational amount that we are using first. Okay. So we are subtracting that foundational amount, and then we get an answer. Okay, and the answer is 94,933. So he is getting 94,933 Rand more than the 95,000 Rand, and that part, only that part, must be multiplied by that tax rate of 26% in that bracket. Okay, and then if we go 94,933 multiplied by 26%, we still have to add the fixed portion. The fixed portion is 35,253. Where did I find that? There, 35,253. Okay, so that is the amount that was actually already calculated on 18% of anything under the 195,850. But don't worry about that too much. Okay, let's go back to our calculation. There we can now say, okay, so it is 94,933 multiplied by 26% plus the fixed portion. That'll give us the full amount of tax that he has to pay. But we don't pay tax on the first 80,000, 90,000, and that's why we get a rebate. So in his case, he is, remember, he's in his 40s, so he only gets the primary rebate that is given here as 14,220. So let's go back here and say, okay, we have to subtract that 14,220. And then we get the full amount of tax that he has to pay during the year. But of course, he's not paying it all in once. He's paying it monthly. And so we divide it by 12. And then we get the pay as you earn that must be deducted from his salary for this month. And then we simply put it in there. And then we now also have to go and have a look at his UIF. Now, his money here, tax, his cash money, before any deductions is 20,343. And we know that the commission must not be added for UIF purposes, but then also this deduction must also not be used for UIF purposes. And in any case, we can see it is way more than the maximum funding salary for UIF that they gave you. Remember? We told you this. It said that the maximum UIF funding salary is 40,872. So that is what we need to base our calculation on. So the UIF will be that amount multiplied by 1%. Why? Because he is paying 1% of his income to the taxman, who will pay it over again to the commissioner, but the company is also paying it for 2% total, but he's only paying 1% UIF. So 1% of that 14,872 is simply 148 Rand and 72. Now we can go and we can say, okay, we had his remuneration that he's getting paid. We subtracted his pension fund contribution. We subtracted his pay as you earn. We subtracted his UIF, and now we can calculate his net pay. Okay, so his take-home pay is 14,960 and 62 cents. Just quickly go and have a look. Did we answer everything? Let's make sure. It says, show your calculations of tax and UIF payable. Yeah, well, we showed our calculations of tax and UIF, so it is fine. And so now we know that when we look at this table that we were supposed to complete, that it is 100% correct. Thank you, guys.